So the second topic we'll be dealing with in the July period is the whole issue of still property development, but the developer. How does a developer treat property, and specifically developers of property which will be sold as residential accommodation? Now, in the previous session, we talked about residential accommodation and we talked about accommodation in a dwelling. This is not the same thing. This is I'm developing a property with the intention of renting it out. So that's a wholly taxable activity. If I buy property, whether I pay VAT on it or not, I'll get an input tax deduction as the developer of that property. If I pay VAT on it, the input tax deduction would be the VAT that I pay. If I do not pay VAT, then I'll get a notional input tax deduction, and that notional input tax deduction is not limited to the transfer duty paid on that property. So there you start off with, I've had my input tax deduction, I developed the property. Now what is the next step? The next step now is once I've developed the property, I have to sell that property, and that's where the challenge comes in. So I thought this was going to be easy peasy. I just sell the property, everybody's going to come to me, buy my property, and I'll be a rich person. But then reality clicks and there's no market. And the sales take place over a long period of time, or just there's a complete slump, as it probably is in our economy at this stage, where the demand for that property is lacking. So now at some point in time, you've got to make a call. What do you do with this property? You can't just leave it there forever and a day. In the meantime, it accumulates costs and all sorts of things. But most property developers do in the interim, they start renting it out. Now, this is where the challenge comes in. If what the VAT Act says, if I use something for my enterprise, that's fine. It stays an enterprise. I get my input tax deductions and nothing really changes until it's sold and I charge VAT. But if I then start using that same property for non-taxable activity, so now I'm starting to rent it out. Remember, now we're back to the previous video where we talked about accommodation in a dwelling. That's an exempt activity. So now it means I've taken this property which I've developed for taxable purposes, I'm using it for non-taxable activity, which means I have to account for output tax now. I mean, that's just what the VAT Act says. Technically, Section 18.1 says you then deem to have supplied that asset at market value, and you deem to have supplied it in the tax period that you first rent it out. So that means I've just picked up a liability on the market value of that property. In the tax period I first rented it out. Then SARS came to the table and said, listen, we accept that rental is always temporary, or that should be temporary, that you haven't now changed your mind in terms of selling that property. All you're doing is you're limiting your losses in the interim. And what we will do then is we will accommodate you, but we'll only accommodate you for a 36-month period. So if you can prove this thing is temporary, so you must still try and sell the property, you have a period of 36 months in which you do not have to make the adjustment at market value. And in that period, you've got enough time to sell that property. If you haven't sold that property in that 36-month period, the suspension of Section 18.1 ends, and you pay the VAT in the tax period where that 36 months ends. So all it really says, it won't charge you up front for the change in use, but you've got 3 years to sell that property. You haven't sold it in 3 years, then output tax becomes payable. Again, output tax is payable at the market value. Now, in terms of the new proposed legislation, the TLAB that's come out in June, and that is something that's happened in July, they haven't further extended the use of the section that governs the 36-month period. Now, through SAICA and SAIT, submissions were made to SARS saying you should extend this further because the underlying reasons for this hasn't changed yet. It's still there. And we hope that when SARS comes back with the final amendments, or National Treasury comes back with the final amendments, that the section will be amended, that the Section 18 Cap B of the VAT Act will be amended to apply for another period of time after it lapses. So that's where we stand at the moment. So two things can happen, as we've said. The one is the 36-month period lapses, and then you deem to have supplied that property. Then that property becomes part of your non-taxable activity. If you then subsequently sell that property, you don't charge VAT on that property. If, however, you sell that property within the 36-month period, you must charge VAT on that property. and it is just a normal sale in the course of the enterprise. You could also, as a other alternative, halfway through this 36-month period, or in the course of the 36-month period, you might say, well, this rental thing works well for me. I'm not going to try and continue selling this property. I'm actually doing quite well renting out this property. And if you do that, that's fine. But the moment you make that decision, Section 18(1) then clicks in. Then the 36-day period is immediately comes to an end, and that must be paid on the market value of that property at that point in time. If you then subsequently sell that property, remember that property is now forms part of your exempt activity. It's no longer part of your taxable activity. So if you then subsequently sell that property, then there's no VAT on that property. So these are the basic rules. It does get tainted a little bit sometimes, and it gets a little bit confusing with the change in rules, and when does something leave an enterprise and when does it come back into an enterprise, where does it stay outside of the enterprise. But by and large, you need to look at the facts of each case. But the very simple rules are, while it's in the enterprise, there's VAT. The moment you moved it out, there's a deemed output, and the sale thereafter is not subject to VAT because it's not part of your enterprise. So what you would see, the trend of all of these videos is it comes back to the nature and the concept of an enterprise. So if something is not part of your enterprise, it's out. If it's part of your enterprise, it's in. Very simple as that. Hope that clarifies the situation to a little extent. We will give you some feedback as time goes on, and we'll see the final amendments to that act, whether Section 18B, Cap B has been amended, and we'll of course advise you whether that 36-day grace period has been extended further in the legislation. As it stands at the moment, it will not be extended, but keep your eyes open, and we will advise you on what's happening in that space. Have a good one.